guys, welcome to Consult 101. Today we have the stud alums of Insti, Anagha and Aarushi. There's no need for introduction, but just for the sake of it, I'll ask them to introduce themselves and then we can get straight into the case.
Cool. So I'll go first. Hi, I'm Anagha. I just did my BTech in civil engineering and I'm going to join BCG as an associate. So during my time at NST, I was a part of Sarang, 180DC, and Actors and YRF, and I'm really looking forward to solving a case today.
Hey guys, I'm Aarushi and I'm also from the Department of Civil Engineering, and I'll be graduating this July, hopefully. So I'll be joining the Boston Consulting Group as an associate this August, and in INSTI, I've spent a good deal of my time in Sarang, and I really hope that this session is helpful to all of you to some extent. I'll try my best. Yep, that's about it.
Awesome. So let's start the case. Are you ready?
Yep.
All right, so we'll be solving a market entry case today. I'll give you the problem statement now. So our client is a telecom operator. They're looking to diversify their presence in India and they wish to enter the electronic home security market. They want you to estimate potential profits and want you to suggest how to capture a significant market share.
Okay. So just to make sure that I've got it all right, our client is a telecom operator in India and they wish to diversify into the electronic home security market. Our objective here is twofold. Firstly, to estimate the potential profits in this new market, and second, to help them capture a significant market share. Is that all right?
Yep.
Okay, sure. So if you could just give me a moment, I'll quickly structure my thoughts and get back to you with a few questions that I would like to ask to scope out the problem a little better.
Sure.
All right. So, for starters, could you since you already mentioned that we wish to capture a significant market share, could you let me know what would be a good enough percentage that is our target for the expansion?
So the company wants to capture about 5% of the market share in the first year.
All right. And would it be fair if I assume that a secondary objective for this would be to make sure that the company is profitable at the end of the day?
Yes, you're right.
All right. So I also now want to understand a little bit about the electronic home security market as such, and I want to understand what product it is that we are looking to sell and diversify into.
Got it. So this whole market, it's just one product. It's like an alarm system. So you install it in your house and you install sensors at all key locations. And when someone's trying to break in or trying to steal something from your house, the alarm system goes off. So you are notified of the burglary or whatever it is.
So it's do we have a different variety of products, or is it just one type of product?
It's just one product.
Got it. All right. And is there any specific location where we're looking to sell this?
So we want to enter the Indian market, but there's no specific geographical location we're looking at.
Okay, sounds good. I also want to understand if we have any idea as to what part of the value chain it is that we wish to enter in while we're diversifying into the new market.
So we haven't thought about it. Let's explore that in this case.
All right, sure, sounds good. At any point of time within the case, would you like me to consider the effect of the COVID pandemic?
No, that won't be necessary.
All right, sounds good. Just one last question. I want to understand if our client already has any form of prior experience in such expansions into different industries.
No, this is the first time our client is doing something like this.
Okay, sounds good. I think I have a good idea about the problem. So if you could just give me a moment, I will quickly get back to you with an overall structure as to how we can approach the problem.
Sure.
So the overall approach that I would like to suggest would be threefold. Firstly, we'll be determining the financial attractiveness of the electronic home security industry as such. We'll be calculating the total profits, which can be written as the product of the market size of the industry into the market share that we'll be able to capture, into the average profit per unit that we sell, minus the fixed investments that will go into the same. Once we deem that the entire venture is profitable, we will secondly move on into discussing the operational feasibility of setting up the value chain, looking at different modes of entry, which will help us answer our second objective, which is to determine how it is that we can help the client capture the market share. And lastly, we'll be looking at risks that could be involved at any point in time in the entire process before we take a final call as to what our recommendation to the client will be. Does that sound good, or would you like me to maybe adopt any other approach as such?
No, this sounds great. Let's go ahead with the first bullet point.
All right, then. So, firstly, we'd like to discuss the financial attractiveness of the industry. All right. So, like I said, the profits can be written as the product of the market size into the market share, into the average profit per unit product sold, minus the fixed investments that come into the picture. We'll be calculating each of these factors in order to determine whether the profits are going to be present or not. So, shall I get started with the market sizing then?
Sure. Also, one pointer I wanted to note here, the initial investment is not something we'd like to look at in the case the company is very financially well off. So let's just start with the market size and not bother too much about the investment.
Sure. Sounds good. All right. So if you could just give me a moment, I will come up with an overall approach as to how we can size this market.
Sure.
All right. So my overall approach to estimate this will be as follows. We would start off with the population of India, and we would split it into a rural and urban population by taking a 70-30 split. We would further be splitting this to calculate the total number of families present in both rural and urban India. The reason we're doing this is primarily because a product such as an alarm system would mostly be a household product instead of an individual owned product. And hence, we'll be looking at the number of households. By taking the average family size, we can calculate the number of households both in rural and urban India. The next factor that we'll be considering would be affordability, which would again vary between rural and urban India. We'll be looking at a potential price of the product if we already have it to determine what income classes of people it is who can actually purchase the product. Once we filter out the people who can actually purchase the product, we'll next go on to understanding the willingness and need to purchase the product, which will depend upon factors such as the criminal activity that is there in the area, the presence of security, if already, whether it's in an urban or a rural setting, the amount of robberies or other instances of cases that have already taken there, and perhaps even some factors such as electricity penetration, if that is required for the functioning of the product. So after we consider all of these factors, we would come down with the final number of households who would purchase the product. And then we can multiply this by the number of products purchased per household, which can depend, varying upon the size of the house, to come up with the final number. Does that sound fair?
Yeah, that sounds like a very interesting structure. I don't want to get into the numbers too much, but maybe for the first two layers, let's discuss the numbers a little bit. So let's take the population of India to be 1 billion. When you speak about the first split, which is the rural and urban split, what ratio would you like to take?
Yep. So I would like to take a ratio of 30 to 70. Does that seem fair?
Yeah, that seems Very interesting. You also mentioned that the families will be taken after this. So do you have an idea of like taking a different family size for both urban and rural households?
Yes, of course. So on an average, the family size in a rural household is 5 members versus in an urban household where you have concepts of nuclear families, you have 4 people per household. So I would like to consider those numbers, if that's all right.
Got it. Okay, that seems like a very reasonable estimate. So let's say that we have an external agency to do the market sizing for you, and we found out that the market size is 15 million households.
Okay.
Yeah.
All right.
So now I'd
Oh,
like you to estimate the market share. And since I've already told you that we have 5%, let's look at how we can get there.
sure. All right. Sounds good. So if you could just give me a moment, I'll get back to you as to how we can approach this.
Got it.
All right. So in order to understand how it is that we can capture this target 5% of the market share, there are two ways to go about it. Primarily, A, we can look to do it on our own, or B, we can look to achieve this through certain external partnerships, which we will get to later. So I would like to start off by exploring how it is that we can achieve this 5% on our own. Does that seem fair? Can we get
Sure,
started with that?
let's look into that. Yep.
All right. So in order to understand how it is we can do so, I would like to get an idea as to the competitive landscape that is already present within the industry. So could you let me know who are our major competitors and what are their approximate market shares if the data is available?
Sure. So we know that there are a lot of competitors. This is a highly fragmented industry, which means that there are a lot of small local players everywhere. And the largest player in the market has a current market share of 5%.
I see. That's interesting. Okay. And do we have any ideas to if the market is currently growing and what is the growth percent of the same?
So the market is growing at a rate of about 10% per annum.
All right. That's good. So very simply, in order to capture the 5%, we can either do it from the growing market share or take somebody's existing market share. So in order to do that, we'll now have to benchmark certain parameters of our company and our product versus our competitors to understand whether we can actually achieve this on our own without any external partnerships. So the parameters that I would like to look at for this are firstly, the product itself, second, the price of the product, third, the promotional channels that we can use, and fourth, the channels of distribution of the product. So I would like to compare these four parameters of us with our competitors to understand how it is we can achieve this 5% by getting an edge on either of these. Does that seem fair? Would you like me to add on?
No, that sounds great. Let's go ahead with that.
All right, so we can get started with the product itself. I want to understand if our product is fundamentally different or is it a commoditized product across the entire industry?
So it's very difficult to differentiate this product. It's very, very similar to what our competitors have. There's no real difference.
I see. All right. Um, Next, I want to look at price and I want to understand at what level we'll be pricing this product compared to our competitors. Would it be less, more, or the same?
So for our product to be profitable, we'll have to price it similar to what our competitors are pricing it. There's no way we can get an advantage in terms of price.
I see. All right. Well, so that's out of the question. The third parameter that we had to look at was the promotional channels, which is essentially marketing. So I want to understand perhaps if this is such a product, if marketed differently through certain strategies, can perhaps get the customers to become more loyal to our product as opposed to our competitors.
No, just owing to the nature of the industry, customers just respond to the price. So the only way, there's no way that marketing on its own can get us a larger market share.
All right. Okay. That's interesting. The fourth parameter that we had to look at was the channels of distribution. So just to clarify by what I mean here is we can have both offline channels of distribution, which would be through your shops and retail stores, and online channels of distribution, which would be through your e-commerce websites. So I want to understand which channels of these do our competitors adopt and if there's any scope for us to perhaps expand via these in order to get a larger market share.
Yep. So the thing is, like I said, the industry is highly fragmented and there are only local players. And the reason for this is that this alarm system that is there is very sensitive and can't be transported across long distances. So distribution itself is a very expensive and time consuming process. And it's very recommended to have offline stores because that is the channel through which all our competitors are pushing their products.
Okay, I see. All right then. So basis the discussion that we've had so far, just to quickly summarize, our product is pretty much entirely the same as what the industry is offering. We cannot afford to lower our prices at the cost of not being profitable. The promotion itself is not something that can draw new customers to us entirely from our competitors. And the offline channel, which is already existing, is the only channel that is feasible to adopt at an operational level. So, basis this discussion, I feel that it's rather unlikely that we can do anything on our own by improving any of these. So, I think I would like to now move on to the second aspect, which was look at external partnerships in order to determine whether or not it will help us achieve the 5% market share. Does that seem fair?
Sure.
Okay. So under external partnerships, I would like to suggest two ways out of which we'll have to pick one. First being mergers and acquisitions, and the second one being joint ventures. So now we need to determine which of these would be a better way for us to achieve that 5% market share in 1 year itself. So I would now like to analyze this. Does this seem fine?
Sure, let's start off by looking at the joint venture possibility.
Okay, sure. So if you could just give me a moment, I'll quickly structure my thoughts.
Sure.
All right. So, since we will be starting off with joint ventures, to the best of my knowledge, how joint ventures work is that both two or more, or the number of partners who are present in the venture, are expected to bring something to the table, which will make the net product a lot better than what it already was without either of the parties being present there in the first place. So, in order to determine whether or not the joint venture is the right thing to do for us, we will look at whether we are offering any form of edge or we look at what exactly it is that we are bringing to the table in order to determine whether or not this makes sense for us. Is that all right?
Sure. What factors would you like to analyze?
Yeah. So there are two areas that I would like to analyze. First is the product itself, and second is the value chain. Under the product, we've already looked at factors such as its price, the quality of the product, promotional and channels of distribution, where we know there's no real edge that we're getting onto the table. So the parameter that I would like to analyze in more detail is the value chain and whether we can bring anything over there. Does that seem fair?
Yep, that seems right.
Okay. All right then. So very simply, we can split the value chain of most companies into one of three parts. The first one being the production process, the second being the distribution process, and the third being the marketing and advertisement. So I'd like to start off with production. So I want to understand if we already have a plan for production put in place from beforehand.
No, unfortunately, we don't.
All right. So, how exactly it is? Do we have the capacity to produce the amount of, alarm systems that are required to be profitable?
No, we haven't set up a plant yet, and if we do that, it'll take a long time. But our goal was to capture 5% of the market share in a year, so that doesn't seem feasible.
Okay. All right. Um, so let's move on to the next step, which is distribution. So I want to understand if we already have a well-established distribution network, or if we have connect to the same, which could help us bring our distribution network to the table as something of a competitive edge.
So this market has lots of local players and we don't have any strong local distribution channels. So unfortunately, we won't be able to contribute much on the distribution front.
Okay. All right. And the third aspect that we had to look at was marketing and advertising, which we've almost already discussed since you've mentioned that the product and the nature of the industry is such that even an extensive amount of marketing is not really going to get customers from our competitors for us. So, basis this discussion, what it appears to me is that joint venture is not really the way to go ahead, and having a possible acquisition or a merger with a company which can give you a 5% market share seems to be the way to go ahead. Does that seem fair?
Yep, that's right.
Okay, got it. Okay, so just to quickly summarize, so far we've established that the market size of the electronic home security market in India is roughly 15 million households, firstly. Secondly, we have established that in order to get the 5% target market share in 1 year, the way to go ahead with this is through acquisition of a company. Now, thirdly, we need to determine the average profit per unit in order to understand if the entire venture is profitable. So, shall we go ahead and estimate the average profit per unit that we get from the sales of this?
Sure, let's do that.
All right. Okay. All right. So, to determine the average profit, it can be written as the price of the product minus the variable cost per unit of the product. So I want to understand if you have any data as to what the price of the product is at which we're selling it.
Yeah, let me give you some information here.
Okay.
So the product is generally priced between 5,000 to 15,000 rupees, and the margin earned on each product is 10% of the revenue. Apart from that, we also have a servicing system. So every month for the price of 200 rupees, we provide a servicing system where people come and check and make sure that the home security system is in place. And on this amount, we earn a margin of 25%.
Got it. All right. Sure. So since the data is given to us in margins, we can easily calculate the profit by multiplying the margin percentage into the price of the product. But since you've mentioned that the price range of the product varies from 5,000 to 15,000, I want to understand if it's all right if I can take an average of this and assume that out of all of the households, say we have a equal 1/3 split and take the average as 10,000 per product.
Sure, 10,000 seems reasonable.
All right. Okay, so the net profit per product that we are going to get is equal to the profit from the sale of one product plus the profit from the service charge that it is you mentioned. So the profit per sale of one product is equal to 10% into the average price of a product, which is 10,000, which is equal to 1,000 rupees. And the second parameter was the profit from the service charge that we will be receiving. So since you've mentioned that it is 200 per month, I'll be multiplying that by 12 to get a total of 2,400 per year as the service charge. And we know that the margin for this is 25%. So the total profit is equal to the margin into the total amount that we'll get per year, which is equal to 25% into 2,400 rupees, which is equal to 600 rupees. So the net profit per product is equal to the profit from the sale of an individual product plus the profit from the service charge that we're offering, which is equal to 1,000 plus 600, which is equal to 1,600 rupees. Does that seem fair? Our number is close? Or?
Yep, you're right so far.
Okay, sounds good. So now we have, since we've already discussed that we will be ignoring the fixed investments, we have the three parameters that are needed to determine whether the venture is going to be profitable. So I'll just quickly calculate the profit, which is equal to the market size into the market share into the average price per product, which is equal to 15 million into 5% into 1,600. So if you could just give me a moment, I'll quickly come up with the number.
Sure.
Yeah, so I'm getting 15 million into 5% into 1,600 rupees as rupees 120 crores. Does that seem fair?
Yep, that's right.
All right. So now that we have a number, I want to understand if our client has a potential benchmark against whether or not this would be considered good enough for them to proceed with this.
Yep, so the client wanted to cross the threshold of 100 crores. So this seems to be 20 crores above our threshold. So the client will be happy with this. We can end the case here. Can you please summarize the case for me?
Sure. Just a moment. All right. So from my analysis, we would recommend the client to proceed with this diversification into the home electronic security market, primarily because A, it is profitable, and B, the client would achieve a 5% market share, which meets both of their objectives. However, having said that, we would also want the client to be aware that there are certain risks that could come up in the entire process. For instance, there are government rules regarding these products. There could be higher customer loyalty issues and more. Thank you.
Thank you. Okay, so how do you think the case went?
Yep, I think it was good. It was very interesting case. Yeah, if you could give me your feedback.
Yeah, sure. So I think the case went very well. I'd just like to point out a couple of things that you did very well so that these practices can be emulated further by whoever's watching this. So firstly, I think you took a lot of pauses wherever required. So you paused after the preliminary question and you paused after every important juncture in this structure, which was very necessary so that you come off as structured and confident. So I think that was good. Also, I want to point out that your pauses were actually on the smaller side. So if other people want to take longer pauses, it's totally cool. Another thing is you explain the mathematics of the structure very clearly, and it's very important to ensure that the interviewer is on board with whatever you're saying. So make sure that the maths is out there. Lastly, not lastly actually. So market size, when it came to that, you came up with 5 to 6 layers, and these were very important and sensible layers. So I think these were well explained, and I think they were on point with the case. When you came to the market share part, you summarized the discussion at the end of every important juncture. So after the first thing where we looked at entering the market on our own, you summarized whatever we found out. And similarly, after the joint venture discussion, you summarized that as well. So that was good because, again, it's very important to keep the interviewer on board. And the maths was done without any calculation error and it was well explained. So these are some things that I really liked about the case. And yeah, that's my feedback.
Cool. Thank you. So
Thank you so much, guys.